Now we have Daniel Hussey up with us, and Daniel, good to see you again. And I noticed
Good
on your
deal.
tweet you wanted to address some of the metals that were not performing as well as gold. I know we'll probably talk about the elephant in the room, and that's what's happened to equities in the last month or so.
Sure.
So what's top of mind for you? You call it. You're the
You
boss.
know, I think, hey, why don't we, take a look at gold while, while we're
Okay.
talking about elephants in the room. I know, one of your prior guests there, our chart analyst was talking about, the needs for rate rising here and that environment that could put a little bit of weight on the shoulder for the gold. And yeah, and I think that that's probably the biggest wet blanket that could be thrown on this rally for precious metals right now, is all of a
Okay.
sudden the US dollar re-upping its rate rising environment. And let's not, let's be frank, since 2012, yeah, since the Fed started to taper their quantitative easing efforts and actually, take rates off of rock bottom and what were effectively negative, we've been in, a decade cycle now of rate rising. And it's interesting to see now this far into it, gold and silver coming back as better plays, so far to end the year 2024 and into 2025 so far. So um,
Yeah.
let's see here. Why not talk?
Relentless. It's been
Yeah,
relentless and
it really has. And let's see here. If I share my
very shallow
screen,
corrections, never giving people a good break to get in, just small little consolidations.
absolutely. And I think it's
So,
probably a good idea to just take a quick look at the dollar index, to
yeah.
give people that bigger perspective that we sometimes don't focus in on all the time. Um, get caught too much maybe in an individual cross or something. But, okay, the dollar index is arguably mostly euro dollar denominated, but it still gives us a good clear trend from 2029, the end of the last major recession, or
Yeah.
2009, excuse me, then that 2012 period where interest rates started to effectively go back up. We didn't have a positive interest rate yet, but the Fed had started to remove quantitative easing, the taper began, and the US dollar began generally an uptrend for the next decade, while interest rates were on for the proverbial rise. And we kind of saw a crescendo of that here into and through the 2020 through 2025 period. But you can see every 5, 10 years, there's these big old ranges the market sets up in. Last one from about 90 through to 103. That was your old kind of dollar strength from interest rates actually entering, a rising environment. And then now, the US dollar has found itself potentially in this 100 to 115 range. And we're very comfortable, I think, in that range. The last, they're part of a year and a half now, the dollar index has been unable to break below that fabled 100 figure. And yet you have gold pushing to all-time highs. Not to say that there's a direct inverse correlation between the dollar and gold, but if you look at the correlation between the dollar, via maybe the yen and the 10-year, and then also the 30-year to gold, there's some strong correlations there still across those bigger asset classes that we can pay attention to. But the dollar having coming off of that high and back down into this old range breaks at least the technical picture of us screaming, all the way back up to 115 for the time being. But the major question of do we stick above that 100 figure in the
Well,
dollar
if you
index,
look left, Daniel, all the way back to the 22, the
mhm.
first high at 181, what was it? 115
On
to
this
100.
this
Yeah,
you know
yeah.
weekly chart,
All right, so that was 1,500 points, right?
right?
So if that was, I don't know, an A or a 1, and then we peaked up here around 110 and we had equality, that would give you 95.
There you go. And that comes in right around that very large upward sloping trend line that we've been
Yeah,
holding during this entire period. So interesting to see, right? A nice little price measurement, 100%
yeah.
down if you measure this a
Equality.
B
Yeah,
wave up and you get that equality move down into that trend line. I couldn't
yeah.
disagree with the longer term picture that, hey, if the dollar does head down, if we break below 100, 95 to 90, that 96, 95 area seems like the next area of logical support for this market to, and let's also consider the old range we were in. That's about 50% of your old range as well.
Yeah.
Um, just an interesting area that may have some attachment from the old, the
Right.
old range as
The
well to it.
memory is the market's memory is left.
Right. For the time being, we're
No,
kind of holding
left.
above those old. Oh,
No, you said right. So I
oh,
said
oh.
left.
I got you. I
I know
got
it's
you.
early, Daniel, but it's later
The bell
there.
hasn't even rung. No, and I've
Yeah, I
got
know. It's
I got
5:40.
two
I'm a,
young ones with
oh, okay.
norovirus right now, so we're just
Oh
having a
boy.
ball in the Hussey household. But
I hear owls outside.
okay,
Anyway,
so
go
dollar
ahead.
could be correcting against a longer term pattern here, right? Is what we're kind of coming to a conclusion on where we're at in that dollar chart. So okay,
Yeah.
if the dollar's coming down, that could be, a period, for the things like the 10-year. Let me flip over to this other chart, which has overlaid with it the Japanese yen futures.
So
Um,
you still believe in the correlation between the yen and yields?
these are very long term
Correlations?
correlations,
Charts.
thank you, and chart,
Yeah.
right, long-term correlations, and they're quite incredibly tight. Can you guys see now?
Yeah.
uh See the 10-year?
Yeah.
Can't
See
tell
it.
from Zoom.
Yeah.
Did say to
And the green is what? The yen?
yeah, the blue here overlaid is the 10-year note, or excuse me, the yen,
Okay.
overlaid to the 10-year. And we seem to be running up into, and while let me bring up a daily chart here, a little more time frame on it. There we go. Um,
Okay.
all right, so we had ourselves in a bit of a correction, and in this kind of what I would call a bear flag on the daily chart. You could correlate that with the alongside the yen as well. If we look at the dollar yen itself, we've had a very good run up over the last several years, and now are trying to starting to find resistance in this 150 to 160 area in the dollar yen. And if you look at a chart of the dollar yen that goes back even further, you're going to see that, which I don't unfortunately have the all of it here. Historically, the dollar yen began trading at around 350 back in the 70s. It fell all the way
Yeah.
to a low of 75. Well, running up into the 160 to 180 area is effectively a 50% retracement of the entire lifetime of the dollar yen's existence, or at least its ability to float as a currency after World War II. We're finding resistance up into this area. All I wanted to point out was this big old range that we've been in between 140 and 160 in the dollar yen, which is
Yeah.
high, which has a correlation here between the 10-year note, between the 105 to 115 handle as well. Because what we've got here is the 6J, which is just the upside down dollar yen. It's in the
Right.
futures. It's denominated in US dollars rather than in yen, for those that
Yeah.
familiar with our FX crosses. But there's a pretty good long-term correlation here between the two asset classes, which means, hey, that's where we're really driving and where the rubber hits the road for where interest rates gets translated into US dollars or vice versa. And the carry trade with the yen is a big factor in that. So that's the reason there's
Let
an
me add
existence
that's
of
I want to
correlation
ask
here.
you about the carry trade being a big factor. So we've
Hmm.
had a pretty good break from recent highs.
Yep,
What were they, 58? And I guess you could say that it has had some effect on risk, but no one talked about that as being part
certainly.
of the risk. So, is there an unwind 2.0 that people will point to another unwind of the carry trade, or did they have enough time on this rally to 58 to repair their positions and not be as heavily in the carry?
Yeah, that's a really good question. And that's where if we take a hard look at some of the commitment to traders reports, we can see, how some of those commercial or more
Yeah.
financial interested groups may be trading. I haven't taken a deep dive into it just myself. I've been kind of focused on grains here as we've unwound kind of done that in the row crops and in grains actually as well. This high interest rate environment has caused people to kind of unwind their carry. And in that sense, it's literally just grain being carried and stored in a silo. Here we're talking about dollars stored in bonds. And with higher interest rates like we have in the US, there's going to be that strong demand. And I think that's why when you look at a chart of the dollar index, we're not down to 100 yet still, right? Where there's still demand
Okay.
for dollars out there because of that high aggressive interest rate that the US has had. If we were to unwind interest rates and they were to, the 10-year chart here going up is interest rates going down effectively.
Down.
So
Yeah.
if we were to go back up to that 122 to 125 area, really unwind this big, rally in interest rates we've had since COVID, that would cause a much, larger downturn in that dollar yen. I think that's what could also cause the dollar to maybe break below the 100 figure. And I'm just trying to point out to people, hey, this 115 handle in the 10-year, this 70 or 7 handle in the dollar yen and in the yen dollar, the Japanese futures. And what I would, look at on the chart of the actual dollar yen is maybe this 140 figure. So long as we're staying above those levels, um, or below those levels for the 10-year, there's probably going to be some more pressure on the dollar, or at least until or support on the dollar until we really get below those levels. Once we do, though, I think that's going to correlate with that break to 95 we talked about earlier, and you're going to
Hmm.
probably see a rally in the 10-year back to 115 to 120. That would correlate with a break in the dollar yen below 140, and a bigger, deeper correction and a little more unwinding of that because arguably the market needs to move. It's been sitting in this range for too long. It needs to go above or below these thresholds. And we could see, a proponent of that happen. And that kind of brings us to gold and silver, where there is a correlation in the between effectively the 30-year note, which is this blue line, and gold, which we have a 4-hour chart up. We look at a daily chart, you can see where this correlation sticks and where it breaks. We went through a period coming into this year where it was pretty strong. It had broken for a period, and now it's starting to come back as gold's making new all-time highs. And I feel there's maybe a narrative and a story there. Okay. Um, so it's not as tight and as glorious as of a correlation between the 30-year and gold as maybe the yen and the dollar. But there is still a correlation here that you're starting to see a bit of a divergence from, or we had a divergence from here into the end of the year, and now you're starting to see it come back a little bit. And so I'm curious to see if we don't also, if gold isn't a precursor and maybe a fear of a lower interest rate or a rate dropping environment, a risk off environment coming in the future, is because of the break of the correlation that we're starting to see here over the last couple of weeks. Gold starting to run higher, which ultimately could that drag 30-year and the bond markets higher as well. And, I'm trying to
Okay.
build a case for lower rates, higher gold, and maybe a little bit more of oh, I don't want to say quantitative easing, but in a period of easing in the rate
Okay.
markets that could help with the risk off that we're seeing and the volatility we're seeing in the stock market as well.
All right. So is this correction? Do you think this correction's over in SPX?
Um, let's take a look at it because my long-term charts, which we've looked at here in the past, everyone can see. I hope everyone can see the chart of the SPX here. Um,
Yeah.
to give you guys all a rundown of kind of the big long-term weekly chart and monthly chart I track. Uh, I should prefer this to be monthly for this discussion. Okay. Coming out of World War II, got a nice big period of a bull market. Back in the 70s, we had a bit of a recession. Market fell from 120 down to 60, basically a 50% pullback. We rallied for the next, 20, 30 years. Into the 80s, we had Black Monday, a big correction down from highs of 340 down to a low of around 220, and then subsequently rallied thereafter. I put us in about 1994 in terms of the longer, the run up from our past recession in the 70s. I think we're about 94, somewhere in this corrective period. Saw significant dips, 50-point dips in the stock market, or 20, 30 point dip in the stock market. Remember, the S&P 500 back then was, a sub 500 point asset, a little
Yeah.
different when we've tagged on a multiple of 10. So a big expansionary risk on period into the dot-com bubble. And then we had our next major recessionary period that ended in culmination in 2009. Fell from highs of 1600, not like unlike 160 in the 70s, down to 70s and 50% pullback. Market then rallied. We had our Black Monday, Millennial Black Monday, as I like to call it, event in 2020, excuse me. And then we subsequently rallied up to new all-time highs. 2024, 2025 to me look a lot like 1994 on that old chart. Um, you had your first major correction, basically 2.5 years after that Millennial Black Monday low, just like you had your first major correction, basically 2.5 years after Monday. The market found support where that
What was
that
that?
oval
20%
effectively
from
is.
the high?
Yeah, right. I mean,
Was that a 20% correction?
it'd be a drop from 360 down to 360 down to 300. So yeah, a 20% correction off the highs there.
Okay,
Not so.
so if we got 20% in the S&Ps, you're talking about 4,800, which is my target.
Yes. Well, yeah, and that would be also holding above that old high that we held there in
That was a
2022.
breakout at 4,800.
Right. And
Right?
then that's absolutely right. That 4,800 breakout. It's
Yeah.
absolutely right. And holding up there. I mean, I'm not saying that we're going to get a big run up. If you can see from this blue circle on the chart in the early 90s through the 2000s, we had the biggest expansionary period of the market of all time. It went up 4x. We went from a 300, trading from 300 up to 1200. I'm not necessarily saying we're going to go from 3,000 up to 12,000 over this next period, but that is how you kind of have to think about the long-term perspective of the stock market. It is what it did in the past. Does that mean it's going to happen in the future? No. But this correlation between recession, the bull market, or the wall of worry that the bull market climbs, manufactured recession is what I like
Yeah.
to call COVID, and then millennium and Black Monday in the 80s. Uh,
Well, maybe you
it's
could say
following very similar patterns, right? And
maybe
then
this is
and
manufactured, this recession we're going to have, or
you wonder, right?
at least speed it up to happen
You,
quicker.
Well, the dollar's been falling. The bond market looks like it wants to pop a little bit. The gold's rallying. I mean, all the stars are aligning. That's all I'm saying, right? The pullback that in the period of volatility that we have on the chart, though, the question you answered me was, are we done? Is it over yet?
Yeah.
Not in my opinion. If you go back to let's look at 1994 again. The initial drop off the highs lasted we didn't take out that old high until April of the following year. So we could
How
have an
big was
entire
that
year
pullback?
worth.
Was
This
that
pullback
20%,
wasn't 480 down to 440, so not quite 20, but about a
10%?
10% pullback. But
That's what we've had already. Yeah.
and
Okay.
all we know for certain is that hey, there's a period that's or was it on the chart here? Here it is. That's correlating, a period of correction or consolidation. This consolidation could have been different. It could have ended up being a steeper three-wave move before a rally up. That wouldn't have changed a whole lot, right? If we went down to 400 here on the chart versus, just the 430 low, right? And made it an actual 20% pullback. That wouldn't have
Well,
changed your
the
narrative
trend.
fits here, right? The idea is that we've had a period of trend. Now we're having a period of consolidation and volatility. We had a period of
Okay.
trend. Now we're
Yeah.
having a period of consolidation and volatility. That's all,
Okay.
this longer term chart I would chew into.
All
I
right.
wouldn't say, oh, only a 10% correction, it
All
could
right.
be deeper.
We have about 5 minutes. Let's get to your wheelhouse and talk about the grains in light of
Sure.
tariffs.
Sure. Grains in light of tariffs, boy, we have seen uh, it's been honestly a headline driven market that not many know how to really sink our teeth into it because every day something changes, right? I've got up some continuous charts though of soybeans real quick. Regardless of tariff talks, I always find that's what's driving the very short term up and down. We have had a lot of sideways consolidation in the grains. I'm still cautiously optimistic because I believe the first go round we hit a an understanding with our trade partners in agriculture, and we're able to meet all of our export demand. That's the big question here, folks, is that will countries like China that take such a massive amount of our, and Europe too now, that take such a massive amount of our row crop production, will they continue to be buyers and drive up that demand? And that's a big reason why over the last several weeks we've had a bit of a downturn on the charts, is because there's
Yeah.
fear that, hey, with this extra tax, there's going to be less
They'll go
demand
to
when there's other
Brazil.
products. That's
They'll
absolutely
go to
right, Dale.
Brazil for beans, right?
That's
That's
absolutely
what
right.
they're doing. Yeah.
And what I want to point out to folks, though, is that, hey, on the much longer term charts, at least, I see reasons to, my lines aren't wanting to work very well for me. I see reasons to be still long-term bullish and say, hey, there's value down at these levels because,
Yeah.
hey, since the 2000s, we've had this upward sloping trend line that has continued. And this is how grains trade. There's a feast and famine cycle to grains. There's periods of low supply, high demand, and there's periods of high supply, low demand. And we seem to find these floors in price, but it never will go too much for too much like too much lower, whatever. We've got May corn up here, big trend line against the lows. This big trend line, in my opinion, kind of harbors the idea that inflation is taking root over the last 20 years, prices inflating slowly over time, and that's driven by things like ethanol demand. So we're looking in the row crops for reasons to be more domestically dependent on our production and less dependent on foreign exports, so that things like tariffs don't have too much impact uh,
But yeah,
on the
like
trade.
always, but with La Nina, isn't the growing season really the critical plantings going okay? Um, but the near harvest or, like August, uh, things could start withering out there if this drought spreads to the breadbasket like it is out
Absolutely.
here.
So, right. So we're going into plantings right now. For those that are unaware, farming is a cyclical trade. We harvest everything in the fall in the northern hemisphere. So all of U.S., Canada, Mexico, we're all harvesting our crop at the same time every year. But we're also planting it and starting to do that field work now in late March, early April, where the seed's actually going into the ground.
Are you
USDA
out
has
there?
already told us. I'm not out there. We
Uh,
do get boots on the ground, and we do what's called a crop tour to go around
okay.
and see how at various points throughout the year the crop is actually producing, right? And you can
Yeah.
tell it's a plant. It's a 3 month long chemical process of a plant going from seed to creating seeds. And we harvest them. And you can tell when plants are doing well or not, and get a kind of a good barometer of how that production is going to be, because we have such a rigid, what's referred to as balance sheet in the row crops. We can tell down to almost the exact kernel how much we produce. So the supply and demand estimate can become very well known, which is a good or bad thing for price. Hence, very big swings very quickly.
Yeah. Look at that trend
Because,
line on the beans. That's beauty. That's a beauty.
and it's the
And
same
and,
idea
and we have
we
our
had in
third,
corn.
we have our second higher low developing right here too. Buy the
Correct.
beans.
And we're right back down into the area. And I wouldn't say, just
Beans in the
two
40s.
hands. We'd love to see it. And I think there'd be a lot of
There'd
farms
be a
that would
lot of a lot of people not eating as much tofu.
yeah, and we will probably see that kind of demand too, because we didn't touch too much on cattle prices, but boy, cattle prices
Yeah.
have been skyrocketing. Probably going to
Yeah.
see more animals on feed. You're going to see more demand. I think
Yeah.
there's a good picture out there once we get through the turbulence of tariff talks. Once we
Okay.
know what those balance sheets are going to say in terms of export demand, and we don't have to worry too much, I think the bottom will be in, and we'll see a bit of a rally here this year. But
All right.
we're waiting for that
One
news.
quick look at wheat long term.
Wheat, similar idea, except it kind of
Not
plays
as
around.
strong. Yeah.
It's there. It's there.
Yeah. All right.
That trend line against the
It's a
lows is
sleeper.
there.
Yeah.
It's just it tends to be a little bit shallower. And the reason, because it's, these big run-ups due to war and other reasons that wheat can go to, double and triple in value. They build up. And there was a crescendo to the Ukrainian conflict and the war with Russia, which is the big reason why wheat hit $14. But as you can see, that fear in the wheat the wheat of the world has subsided. So
Yeah.
we're
Oh
probably
yeah.
down to the value area for wheat as well. Yeah, you want to accumulate long-term stockpile of wheat, great time to do it. But otherwise, yeah, we need to see wheat back above $6 to start getting excited again.
Okay.
Yeah,
I'm
it's
already
something that I think could
excited.
happen.
I'm building a silo in my backyard, and I want to be like Joseph in the Bible and be able to share it with people when they get hungry. And everyone who's just listened to Daniel for 30 minutes can tell that he's a generalist. But unlike most generalists, it's because he's a specialist in many things. Some journalists just aren't an expert in anything, so they speak in general terms. But uh, you should consider, if you like futures and futures options, setting up an account with Daniel. Uh, most places you don't get to talk to anybody either, and
That's
I
right.
know I miss that. So
Yeah, that's the special thing of what we do for commodity producers. We work with speculators and any futures trader. But if you are looking to get more, take a deeper dive into commodities, want to understand the fundamentals behind some of these, we can build out, entire risk portfolios around that. But that's the value of working with a full service broker, is that personal experience you get with them and the ability to build a strategy that makes sense for you. Some
all
guys
right,
that's more
average
speculative.
clearing costs for a trade.
Well, full service
Yeah,
for clients that are looking for full-on commodity
yeah,
risk management, we
yeah.
charge around 25 or one penny, $25 a side. Otherwise, we
Uh,
have, for self-directed traders, we have discounted rates that get down and are price competitive at,
right.
the $2 to
Okay, well, you
$5
know
mark
what,
based off
Daniel?
of volume.
That those used to be discounted rates,
Yep.
$25.
It,
Okay,
it
so
used to be.
and used to be. Okay, anyway, so you get really full service at discount prices. So that's my pitch. I like Daniel. I think that he'll work hard for you, and appreciate
Well,
you
thanks for
dropping
having me,
by.
Dale.
Yeah.
Absolutely. Have a good one, everybody.
All right, Daniel. So I'll see you in June.
Sounds good. We'll get on the schedule.
Yeah, well, I'll send you a date and have a great quarter, my trading warrior brother.
You too, Dale. Have a good one, everybody. Thank
All
you.
right, Daniel Hussey Jr., find him on X under that name. And that's a wrap. Okay, I'm glad you liked it, Laura. I think you could buy grains and just hold them. Don't leverage them, you know, just own them. All right, that's a wrap. Don't just count your bushels, count your blessings. And I'll see everyone tomorrow. You're very welcome, everyone. Get into the community. It's going to help you. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.